Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. on Midcap Radar. Midcaps fall in line with large peers. The Nifty slips below 18,600 intraday, but recovers slightly. Metals, IT lead the slide. FMCG shows some resilience. PSU banks gain.
State-owned lenders Bank of Baroda and Bank of India surge in bullish commentary from Morgan Stanley. The brokerage believes the two lenders offer the best relative risk-reward. Bank of India, Indian Bank and PNB hit fresh 52-week highs.
Shri Digvijay Cement walls higher on a positive demand outlook. The management tells CNBC-TV18 volumes were very strong in the month of November. The company is confident of a double-digit growth in demand in the coming quarters.
Gravita gains as its aluminium recycling plant in West Africa starts production, while strong coal collections gives IRB Infra a fillip.
Astra Micro rises on a fundraise plan. Bajaj Consumer gets a likely buyback boost.
All right, those are the top headlines that we are tracking on Midcap Radar for you. For the markets, it is still lower. 84 points cut on the Nifty is what we are seeing, but there's a tad bit recovery from the lows. We also have the Midcap index, which is actually underperforming, largely in line with peers, but 0.5% of a cut in the Midcap index as well. Remember, this index hit a 52-week high yesterday, has been a consistent outperformer. So today it has come in for some profit taking, so to say, and we have read across the sectoral indices as well. So Reema, beat IT, beat pharma, all of them are falling. Of course, some of them are falling less, but there is red across all the sectoral indices today.
Indeed, it's again the global facing,
Yes.
right? They were the ones which did well yesterday as China exuberance was there, and plus, everyone thought perhaps, the US economy will be able to weather the rate hikes, etc. But today, these are the sectors leading on the way down. The Nifty IT index is down 1.5%. The metal index has lost 1%, while the Nifty PSU banking index, let's get that up for you on your screen, it's currently up close to about 1.5%. But let's get to our Midcap Mover segment. Vivek joins in to take us through the midcaps that are moving around in trade. Vivek?
Well, that's right. So quite a few stocks on our radar. And very interestingly, while the index is seeing quite a bit of a correction in today's trading session, almost over 50 stocks in the Nifty 500 index have hit fresh 52-week high today. So quite a long list as far as stocks hitting their 52-week high in today's trading session is concerned. But we've picked out quite a few stocks. Most of the mid-cap and small-cap banks today are at a fresh 52-week high. So Bank of India, IDBI, Indian Bank, PNB, J&K, all of them are at a fresh 52-week high. Some of the other stocks today, that have hit a fresh 52-week high. Sangvi Movers on the back of very strong management commentary on our own channel. Ricoh Auto, this particular stock has continuously been making new highs, as well as Kirloskar Electric continues to surge higher in the trading session. Some of the stocks that are seeing very strong volume in today's market, backed by very strong price action. Puravankara, this particular realty stock is doing very well. Navkar Corp, Equita Small Finance Bank, as well as JT, EKT are all buzzing on very strong volumes. On the other hand, some of the other stocks that we're looking that are seeing quite a bit of correction in today's trading session. Satin Creditcare, Dish TV sees a bit of profit taking after the strong surge this stock has seen. Lemon Tree as well as Varun Beverages, all of them are seeing profit booking in today's trading session.
All right, all those mid-cap movers that we are talking about. Vivek, thank you so much for joining us. With that, let's get a technical check on the markets as well. Rahul Sharma, market strategist, head of research and development at Equity 99 Advisors, is joining us now. Rahul, good afternoon. Thanks a lot for joining us. Well, some profit taking is what we are seeing today, but do you think, as per charts, it will continue or will consolidate around these levels?
Good afternoon, Sonal. And I think market is in consolidation after such run-up which we have seen earlier. And also we can say, call it as a slowdown in trades. I think this will continue further for a few more sessions and we shall trade in a range only, and a possibility of minor correction will continue. The momentum in market is also weak as all eyes are focusing on the outcome of NPC. So I think Nifty at current levels has a very strong support at 18,500 levels, which is actually a 100 DEMA on early charts, with an immediate resistance on upside at 18,690 or 18,700 levels. Similarly, Bank Nifty, which has a strong support line at 43,000 on immediate basis with resistance at 43,300 levels. I think index specific buying or selling is not recommended from my end. One should look for stock specific actions only.
And what would those stock specific actions be?
I have selected IRB Infra on the first, which is trading at 284 levels near. So see, stock is in good momentum. Charts are positive and making a flag and pole breakout on daily charts. So the target levels for IRB infra is set at 300 rupees, keeping a stop loss at rupees 275. And second selection is Tata Power, which is trading near 228. See, the stock was consolidating near its 200 DEMA. And now this consolidation looks like it has made a good base on for an upside journey. And now it has crossed all important moving averages on daily charts. So stock is looking bullish for short term. Target for Tata Power will be 240, keeping stop loss at rupees 224 or 225 levels.
All right, Rahul, thank you so much for joining us, taking us through your technical picks and the outlook on markets as well. With that, we'll slip into a break now. On the other side, Shujal Rahman, the CEO at Garwade Technical Fibers, will be with us to discuss their business outlook. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and it's time to go straight to the corporate on our radar. Garwade Technical Fibers, according to an Ambit report based on its visit to one of the company's plants, the brokerage says replacement demand, customer upgrades and market share gains are expected to drive growth for the company. The company also recently announced a 90 crore rupee buyback. To discuss all this, let's welcome Shujal Rahman, who is the CEO of the company. Mr. Rahman, good afternoon. Thanks a lot for joining us. I wanted to understand, out of all the segments that you have, including aquaculture, there's fisheries, sports, geosynthetics, which is the segment which is driving growth for you? And say 2 to 3 quarters down the line or 2 to 3 years down the line, where will the most amount of contribution coming for? Because you are talking about expansion in geosynthetic segment. Will that be something that will see an increase in contribution?
Good afternoon, and thank you for having us on the show. As far as expansion is concerned, aquaculture will continue to be our driving engine. Growth opportunity is there for us to grow in aquaculture, salmon aquaculture. We are also evaluating options, and actually we have also entered into non-salmon aquaculture in countries like Panama, Mexico, Indonesia, where the market is big and we are getting good traction for our products. So aquaculture, both in salmon and non-salmon, will be an opportunity of growth for us. Sports is another segment which is doing well. It has had a 27% CAGR in the last 3 years. We expect sports to continue to grow. Railways is an opportunity in geocentric for us. You may be aware that in NIP, 14 lakh crore has been allocated for railways, and geosynthetic is an opportunity because penetration is at 0.1, 0.2% level in India, and even if it doubles, it means a big number for us. So these three are the opportunities areas for us: aquaculture, both salmon, non-salmon, and geosynthetic and sports.
Mr. Rahman, could you tell us what is the addressable market size in all these 4 segments? Salmon fishing, non-salmon fishing, sports and the allied business, and fourthly, geosynthetics.
So I'll try and answer it segment-wise. It's difficult to give an overall answer, but in aquaculture, we are already at about 40% market share globally. The market is growing at a good pace. The fish consumption is increasing. Requirement for protein is increasing. So overall, salmon will grow, and our market share will try and increase the market share also. Also, as you may be aware, that we are focusing on focusing on innovation, and we already have 23 patents granted, and 77 patents have been applied. So we are trying to upgrade the customer to a next level of product. We have one product which is called V2, which is a patented product. There, the realizations are much higher. So even at the same level of market share, our value share can keep increasing. So that's the opportunity that we have for salmon aquaculture. Non-salmon, as I just told you a while back, salmon is only 30% of the global fish production, so to say. Non-salmon is 70%, and there we are trying to expand to new geographies. We already have got good gains, and that will be an opportunity for us to grow forward. As far as the market share in sports is concerned, very difficult to give an answer to that because we are in 75 countries, and USA and Europe are the big countries. I would say we are a market leader in the sports segment, but there is also opportunity to grow in sports. We have also entered into sports allied, which is the metal part of, let's say, metal frame and gym mats and those kind of products, which are accessories for sports, wherein we were not there. A lot of these products we were getting sourced from China, but now I think our customers want us to supply it to them. So we are already entering into these segments, and hopefully this will be a good opportunity for us in terms of growth.
Okay.
As far as geosynthetic is concerned, sorry, yeah?
No, go ahead.
Geosynthetic, as I told you, I think railway is an opportunity for us with 14 lakh crore allocated for railways at 0.1, 0.2% penetration. Even if the penetration doubles, it's a big number for us. And we have, as I told you, we are driving penetration innovation. That's the way to grow for us.
Okay. So that is about the top line. I wanted to understand what is happening on the margin level. You had mentioned that you expect gross margins to inch up at that 70% mark again. Where are we when it comes to margins, both on the gross and the EBITDA level? And what about raw material costs? Has that been an issue for you, or is it getting better in Q3?
So coming to the margin at a gross level, we are now almost back to, let's say, 19-20% level. If you notice in Q1, we were at 15. We came back to 19, and we will probably maintain 19-20% level going forward at an overall gross level. Operating EBITDA is about 17%. They're also from 13, we have moved to 17, and hopefully we'll maintain at 17% level. So that's on margin. As far as the overall growth is concerned, as I told you, we are looking at double-digit growth and both in top line and bottom line.
Okay. Can you talk a bit about this allied sports business? The metal rods that you need, the gym mats, etc. How big is the opportunity? What is your market share right now? And are products from China coming in? And what's happening on this China plus one factor here?
So you may be aware of the supply chain challenges that most companies face, and we are supplying these nets, the sports nets, to all our customers who obviously are buying nets from us and buying these, let's say, a tennis post or a frame. These kind of products or a gym mat from a let's say supplier in China, and they are also now want to consolidate and give all the order to one supplier. So we're getting there. We have good relationship with the customers. As I told you, we are the market leader in the netting segment. So hopefully this opportunity will also come our way. It's difficult to give an answer of the market size because it's very fragmented, and it's not easy to answer that question.
Okay. You were looking at some acquisitions as well, especially in Europe. Are asset prices or the prices of acquisitions something that is looking very attractive? If you are looking at acquisitions, what segments will it be, and what is the kind of cash that you have on your books? By when do you think you'll be able to close on those acquisition plans?
So the acquisition will be in the area that we operate. So will be strategic acquisition. We are evaluating options, and as I mentioned last time in our interview, I think Europe is one option definitely we are evaluating. But these things are 0-1, so we are discussing with some prospects, but still things are not moving forward. Hopefully in the next few quarters, you should be able to hear some good news on that front, but right now nothing is in the pipeline. We are obviously wanting to deploy the cash. You are aware of the buyback. So we are always trying to deploy the cash, and M&A is definitely on the radar, but nothing at this stage as of now.
Would the kitty for acquisition be? Have you set aside an amount that, okay, this is the amount of acquisition we would be making, or something in that regard?
So it is the first acquisition that we are evaluating, so it will not be a big acquisition, but it depends on the prospect. If the acquisition is good, we obviously can go. We have about 400 to 500 crore on cash on balance sheet. So that's not a problem, but it will probably be a small acquisition to start with because we need to know how to do an acquisition and how to run it.
What's the big risk on the horizon for you, Mr. Rahman?
See, our products are linked to food, so 70% of business is food linked. So I don't see any risk. Both our segments in fisheries and aquaculture are growing. Sports, we were expecting that there could be some issue, but I think overall the demand is very good. The order pipeline is good, and the light opportunity is also giving us some level of growth. So overall on the demand front, we are very positive.
Okay, Mr. Rahman, thank you so much for joining us, taking us through what the demand outlook is and what growth targets are looking like for your company. With that, we'll slip into a break. On the other side, in our special segment, Midcap Spotlight, we'll focus on Bajaj Consumer. Stay tuned.
Wishing CNBC-TV18 a very happy birthday. CNBC has been at the forefront of providing business views and analysis for last 2 decades. I expect them to continue to do this good work. Wishing them all the best in their journey ahead.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18, and this is our special segment, Midcap Spotlight. Mangalam is joining us to tell us what's happening with Bajaj Consumer. It is buzzing in trade today as well. Mangalam?
Well, that's correct. So Bajaj Consumer is buzzing today. In fact, it was buzzing yesterday as well, and one was wondering why. And turns out now we know, because post-markets yesterday, the company did announce that the board will meet on December 9 to consider a buyback, and as a result of which the stock is up around 3% today too. To consider the modalities of the buyback, let's look at a few numbers. Buybacks can be almost 10% of equity of the company if it's a board approval, and 25% if the company goes ahead and takes shareholders approval as well. The net worth of the company is closer to around that 850 odd crore mark. So 10% would mean 85 crores is what they can buy back with a board approval, and also 211 crores if they go all the way to get a shareholders approval as well. Do they have the wherewithal to do that? Well, I was looking at the cash and current investments on their books. Cash is just about 8 odd crores, but if you take a look at the current investments, it's about 619 crores. So cash and current investments put together is close to 627 crores. So they do have the wherewithal to go ahead and do that. And that brings us to the final question: will the promoters participate in the buyback? Because remember, the promoters stake in the company had significantly declined to 38.04% when they were forced to offload some stake to manage the group's debt-related problems. And as a result of which, it will be important to see whether promoters participate in this buyback or maybe let it go with their stake as a result of which increasing. The stock has been an underperformer. From its lifetime high, it's down 60%, and it's down 13% from its 52-week high as well. And the last 5-6 years, it has lost a significant amount of its value. And that's been a result of the poor fundamentals as well. In fact, in the second quarter itself, we saw the company's EBITDA margins decline by almost 1,000 basis points and gross margins down by almost 730 basis points. Let's see whether this buyback and the future course of action can go ahead and provide a kicker to this underperforming stock.
Thank you very much for lucidly explaining that. The stock was up 3% yesterday and today as well. In anticipation of that buyback announcement on 9th, the stock has climbed 2.7%. IRB Infra is buzzing in trade. The company has seen robust traffic growth across projects in all vehicle categories in the month of November. Vivek is here with the details.
Well, that's right. So IRB Infra, this particular stock has been a stock that's clearly outperformed, from Q1 to Q2. This is mainly on the back of the fact that toll collections that were seeing quite a bit of a dampener as far as last year was concerned has seen very robust growth and very robust recovery. When you're looking at the numbers, the gross toll collections for November was up almost 6.5% on a month-on-month basis, coming in close to the 366 crore mark, and on a year-on-year basis was up almost 40%. Now, also important to keep in mind that on the base year, that is November 2021, due to the farmer agitation protests, toll collections were actually stopped. So the numbers optically look a lot higher when you're comparing it on a year-on-year basis. Nevertheless, it's a very strong set of collection figures that have come in, and along with the deleveraging that the company has done, this particular stock has clearly seen a re-rating in the last couple of trading sessions.
Thank you very much for that. The Nifty is at 18,620, a cut of 80 points. But about half an hour back, the Nifty was below 18,600. So in that sense, at least it's off from the lows that it was around 1 p.m. Reliance Industries has also inched higher. Reliance Industries is now up close to about 0.4%. 2 weeks ago, Reliance Industries was the big contributor to the up move, which took us all the way to those all-time high levels. So Reliance is doing well. A couple of these auto names, pull up something like an Amara Raja or a TVS Motors, and you would see that spike coming through in the last few minutes. Indian Hotels, strength today, strength this entire year. So it's going to end the year with a flourish, 80% higher on Indian Hotels so far in 2022. And a couple of these fertilizer names like RCF and NFL. Not sure if there is some news, but the stocks have started spiking up. With that, it's a wrap on Midcap Radar Mutual Fund Corner when we return.